It is 8:47 a.m. Pacific Standard Time. It is the 25th day of February 2025. It's 2/25/2025. That's a lot of twos. It's a lot of fives. Probably some numerology involved. We got Tether in the news. It's not, well, it's an opinion of the guy that is behind Tether and all that, you know, Paolo Ardoino, I guess is how you pronounce his name. He swears up and down that they're after him. We'll get into who they is, you know, they. And then I want to continue the discussion on Tether, with Tether on Lightning, because you will probably accuse me of stop talking about shitcoins. I get it, except for the fact that this isn't going away. This Tether on Lightning, this Tether on Bitcoin, this U.S. Treasury debt jubilee that is going to be enabled by the continual buying of U.S. debt in the form of U.S. Treasuries by Tether to crank out yet more and more stablecoin. It's not going to go away. So we might as well wrap our heads around what the hell is going on. El Salvador's in the news. Metaplanet is in the news. You'll probably know why. And then yet another state has decided to have fun staying poor, while yet a different state tries to reduce taxes on spending Bitcoin. And then LiftPay is in the news. And I want to talk a little bit about Frostr. But first, Paolo Ardoino, competitors and politicians intend to kill Tether. He sounds just a little paranoid. I hope everything's okay over there with Paolo. He's, you know, most of the time he's kind of an all right guy, but hey, let's find out what his issue is this morning. And this is from Cointelegraph, written by Zoltan Vardai. Tether's competitors are working to push the world's largest stablecoin issuer out of the crypto market, according to the company's CEO, Paolo Ardoino. Tether, the issuer of the world's largest stablecoin, USDT, has a market capitalization of more than $142 billion. That's over twice as large as Circle's USDC at $56 billion, according to Cointelegraph data. However, the stablecoin issuer is facing mounting pressure from both competing firms and politicians, Ardoino said on a February 25th Twitter post. Quote, "While our competitors' business model should be built on a better product and even a larger distribution network, their real intent is, quote, kill Tether. Every single business or political meeting that they have culminates with this intent. I'll leave it to you to define a competitor trying to use lawfare to kill an opponent instead of focusing on better products," Ardoino said. Tether will continue focusing its mission to promote global financial inclusion, particularly in undeveloped countries and economies, Ardoino said, noting that USDT is used by more than 400 million people and gains 35 million new wallets every quarter. Ardoino's comments follow Tether's exclusion from the list of 10 firms approved to issue stablecoins under the European Union's Markets in Crypto Assets, or the MiCA regulatory framework. Now, here is a full tweet by Paolo Ardoino. He says, USDT is the most successful tool for US dollar hegemony and distribution across emerging markets. Dude, he said the quiet part straight up out loud. If you have not been listening to me for the last, few months about what I believe Tether is going to become, Ardoino just said it. It's the most successful tool for United States dollar hegemony and distribution across emerging markets. I told you. I freaking told you this is how we're going to get the second. This is going to be the second tranche of U.S. debt. But this time, This time, the rails, it's Tether. And anyway, he says Tether built over the last decade the widest physical and digital distribution network, spacing from thousands of kiosks in Africa and South America to digital remittance platforms, from payment backbones to institutional tools. Every single day, our teams and portfolio companies are with their boots on the ground in countless areas within developing countries, helping communities and growing utilization, trust, and education into USDT, and by reflection into the United States economy. That's how USDT helps more than 400 million people currently and grows at the pace of 35 million new wallets per quarter, focusing on developing countries while strengthening the United States dollar and holdings of over 115 billion in U.S. treasuries, making Tether the 18th largest holder by size of U.S. treasuries. While our competitor businesses' model should be built on a better product and even bigger distribution networks, their real intent is kill Tether. Every single business or political meeting that they have culminates with this intent. While it might seem an overstatement, it's a fact, and it's being reported independently by hundreds of people inside and outside the digital asset industry in touch with the United States administration. I'll leave it to you to define a competitor trying to use lawfare to kill an opponent instead of focusing on better products. And that's the end of his tweet. Well, according to Patrick Hansen, Senior Director of EU Strategy and Policy at Circle, the list includes Banking Circle, Stablecoin Issuer Circle, Crypto.com, Fiat Republic, Membrane Finance, Quantos Payments, Schumann Financial, Societe Generale, Stable IR, and Stable Mint. The Circle executive added that these 10 service providers have issued 10 euro pegged stablecoins and 5 US dollar pegged stablecoins, Cointelegraph reported on February the 19th. Tether has faced growing regulatory challenges in Europe since MiCA regulations went into effect at the end of 2024. To comply with Europe's MiCA regulation, crypto exchange Kraken said that it would delist 5 stablecoins, including Tether's USDT, starting March the 31st. Quote, these changes ultimately ensure Kraken remains compliant and is able to provide its exceptional trading experience to European clients for the long term, the company stated in an announcement. Crypto.com, another major exchange, confirmed that it would also delist USDT and 9 other stablecoins starting January the 31st, 2025. The exchange said users will have until the end of the first quarter of 2025 to convert affected tokens to MiCA-compliant assets. Any remaining holdings will be automatically converted to a compliant stablecoin or asset of corresponding market value. MiCA may introduce systemic risks for stablecoin users, considering that banks can loan up to 90% of their reserves, Arduino told Cointelegraph during an interview at Plan B Lugano in Switzerland. Quote, if you have 10 billion euros under management, you have to put 6 billion euros in cash deposits. That is 60% of 10 billion euros. We know that banks can lend out 90% of their balance sheet, so of the 6 billion euros, they lend out 5.4 billion euros to people. 600 million euros would remain in the bank balance sheet. I don't know why this particular article decided to end with that particular quote, but the real guts of this is that Circle seems to be becoming, the Circle stablecoin, seems to be becoming the golden child for European markets, while Tether is pretty much US, Canada, Central America, there's a whole bunch of it in Africa, and there's a whole bunch of it in South America, there's a whole bunch of it in Southeast Asia and some other places. But Europe seems to be making a choice to be okay with Circle rather than Tether. Now, here's the thing. I think Tether's network effect is a little too strong. For Circle and Jeremy Allaire, I can't pronounce it, Allaire, I think it's Allaire. he's the guy behind Circle, and Circle was on the wrong side of the block size war, so they are not to be trusted. It's not that I trust Tether. Please understand, I don't use it. I've never held it. I don't have a Tether wallet. But I can't help but look at the landscape and say Tether pretty much has the network effect. And as we've been discussing over the last few episodes of this podcast, USDT on Lightning is probably going to expand that. So here is Roy Scheinfeld with a Bitcoin magazine article entitled USDT on Lightning, the Good, the Bad, and the Unknown. Let's get it going on here. Everyone has heard the Chinese proverb, the British misquote, quote, "May you live in interesting times," and how it's supposed to be a curse. It sounds deep, like a quote for edgelords over 80. But have you ever considered the alternative? According to the Anglo-Saxon Chronicle, there were nearly 2 centuries where nothing much happened. Vivian Mercier famously called Waiting for Godot a play in which nothing happens. Twice. But nothing happening 191 times? I'll take interesting times any day. And that's exactly what we have now. Tether, with their stablecoin USDT, are coming to Lightning. We've been talking a lot recently about how Lightning is the common language of the Bitcoin economy and how Bitcoin is a medium of exchange, and it really is. You can read our report here, and of course that's a link. These two arguments now seem to be converging. Thanks to Lightning working as a common language, it makes Bitcoin interoperable with a wide range of adjacent technologies like USDT. And USDT is going to turbocharge Bitcoin into new use cases, new markets, and new challenges on a scale that the Lightning ecosystem has yet to experience. Given the choice, I'd rather dive headfirst into the unknown than spend the afternoon on the couch. All the cool stuff is in the unknown. Given the choice, USDT on Lightning is terra incognita. Interesting times indeed. So let's think about what it means for USDT to join Lightning and for Lightning to move USDT, the opportunities, the risks, and the wide open questions. Taproot Assets 101. Lightning was originally intended to increase the throughput of the Bitcoin blockchain, so Bitcoin was to be its only cargo. Taproot Assets is a new protocol that allows fungible assets like stablecoins to be transmitted over Lightning as hashed metadata, piggybacking on the same infrastructure used to process Bitcoin payments. The way it works is pretty simple for anyone who understands Lightning. The recipient generates an invoice that pings edge nodes, for example, the nodes connecting users to the broader network, for exchange rates between Bitcoin and the asset in question, USDT in the current case. Once the user accepts an edge node's exchange rate, they generate an invoice for the payment and send it to the payer. The payer then sends the asset to the edge node on their own side. The edge node converts everything into a normal-looking Bitcoin payment. The payment proceeds through routing nodes along the network as usual. The edge node on the recipient's end converts the payment back into the original asset, which is USDT, and then forwards it to the recipient. Taproot Assets leverages the versatility of Lightning and Bitcoin to let users transfer new kinds of assets over the network, using Bitcoin as the universal medium of exchange. One corollary of all the nodes speaking Lightning is that any routing nodes between the edge nodes see only BTC in transit. Lightning tells them how to move BTC, and that's all they're doing as far as they know. Oh, awesome. But there's more to it than just technical specs. USDT is, after all, a massive medium of exchange. Tens of billions of USDT value change hands every day, spread across millions of payments. Its daily trading volumes are in the same ballpark as the Brazilian real and the Indian rupee. This is a big deal. So what does Lightning mean for USDT? And what does the addition of USDT mean for Lightning? The good. Well, for Bitcoin. So far, much of the strategy to Bitcoinizing commerce has focused on orange pilling as many people as possible and growing the circular economy one user at a time. This strategy has perhaps reached the limits of its scale. The circle has grown massively in the last decade and a half, but it's still limited. And we need to think in terms of millions at a time. Now that USDT and Bitcoin are natively interoperable on Lightning, the circle has gained tangents. With USDT on Lightning, each party to pay a payment, the payer and the recipient, can choose whether to use BTC or USDT on their own end, and neither depends on the other's decision. A customer can pay in Bitcoin and the merchant can receive USDT. Or the customer can pay in USDT and the merchant can receive Bitcoin. Or they can both use the same asset. It doesn't matter. Once both assets are native to Lightning, they become automatically frictionlessly interchangeable. Frictionlessly interchangeable. There we go. You got to get it, Dave. Everyone is free to opt for Bitcoin's advantages as a medium of exchange grown from the bottom up by the users, or for USDT's advantages as an asset whose price is as stable as United States monetary policy and Tether's liquid reserves. Lightning, and by extension Bitcoin, stand to gain millions of users and billions of dollars worth of spending power. It's a qualitative extension of Bitcoin's utility. The new use cases will do more good for Bitcoin than a broad boatload of orange pills. It's also potentially a quantitative explosion for Lightning. Many of those new users might not even know that they're using Lightning thanks to its efficiency as the common language of the Bitcoin economy. But we old school Lightning vets know. This is what we've been building towards. And since we just mentioned how Lightning would make USDT easier for Americans or American users to access, USDT will also make it easier for them to use Lightning. American tax regulations treats BTC like an equity, making each payment a potentially complex concatenation of tax events. But if U.S. users can access Lightning with an asset that never incurs capital gains, then they'll have access to many of Lightning's advantages without one of its particular regulatory drawbacks. The good for Tether. Tether typically issues USDT on proven blockchains that have achieved significant market traction, and they have no interest in launching their own. USDT is currently available on Algorand, Celo, Cosmos, Ethereum, EOS, Liquid Network, Solana, Tezos, Ton, and Tron. Note that these are all proof-of-stake blockchains, except for Liquid, which uses a federation. So they're necessarily more centralized, much more centralized than Bitcoin. These blockchains also face different trade-offs. Ethereum is relatively decentralized for a POS blockchain, but its transaction fees are notoriously high. Tron is cheaper. Perhaps that's why, according to one estimate, nearly 7 times more monthly active retail USDT users opt for Tron over Ethereum and send 8 times more retail volume over Tron. But Tron is notoriously centralized, making it a choke point for USDT. If Tron were to fail, Tether would lose something like half of its total capacity across all blockchains. Ouch! By allowing USDT to be transacted over Lightning, which is inherently decentralized, Tether mitigates their dependency on cheap, centralized blockchains. Further, Lightning can make USDT much more convenient to use in the U.S. market. U.S. exchanges sometimes limit USDT transactions to certain blockchains. For example, Coinbase says, quote, Coinbase only supports USDT on the Ethereum blockchain. Do not send USDT on any other blockchain to Coinbase. Lightning gives big exchanges like Binance, Coinbase, and Kraken, which already support Lightning today, a decentralized alternative for USDT payments to offer their users. Now the bad. The new American administration has mooted onshoring the entire stablecoin industry and suggested that regulating it is their first priority. In other words, they'll be paying very close attention to every development. As long as stablecoins like USDT are pegged to the dollar, those who control the dollar and profit from it will want to control the stablecoins too. Regulators think they can even improve on freedom by regulating it. They can't help it. It's in their nature. But it follows that as USDT gains utility on Lightning and Lightning gains utility as a means to move USDT, we're all going to be attracting greater scrutiny from regulators. It's hard to say how much they'll actually be able to do or what they're going to try, but it won't be any fun. Regulation is always friction. One area that's likely to attract regulatory scrutiny is the edge nodes. Conventional centralized exchanges tend to be subject to KYC AML rules in many jurisdictions. If the edge nodes will be automatically exchanging USDT and BTC and forwarding payments, they might also look a lot like conventional exchanges to regulators who tend not to like decentralization. Okay, so now the unknown. What's the cost? What's it worth? While Lightning does offer users in USDT some significant benefits, it's not obviously the best all-around solution for every payment involving USDT. Lightning users expect low fees. So do USDT users who use centralized blockchains and custodial exchanges, but adding a second asset to Lightning adds some financial considerations that everyone, routing nodes, users, and especially edge nodes, will have to reckon with. First, the edge nodes are providing the typical task of Lightning service providers, keeping users connected to the network with enough channels and enough liquidity to keep those payments moving, in addition to converting between assets. That conversion is a valuable service that deserves compensation, and it can also be risky. Second, USDT is likely to increase transaction volume considerably, which means that LSPs and routing nodes will have to keep more liquidity on the network to forward those payments. They don't take the same shortcuts as custodial exchanges, which just have to update their internal ledgers. The economics of liquidity allocation still apply, only more so. Will Lightning be able to compete with centralized exchanges like Tron for USDT payments? The answer will probably resemble the answer to most questions about matching technologies with use cases. Each technology will have certain strengths and weaknesses that recommend it for certain use cases and not for others. As usual, the market will figure it out. However, since the technology was not tailored to this particular use case, price discovery will be a process of trial and error, which takes time. Edge nodes face the risk of the free call option problem, which is interesting enough to merit its own discussion here. This is a brand new risk, and it's inherent to any situation involving two assets in a single Lightning payment. Lightning payments need to be completed within a certain time in order to be settled, or the invoice cancels automatically. That time is the T in HTLCs, hashed time lock contracts. When the edge nodes bid with their exchange rates for USDT to BTC and vice versa payments, they calculate their bids based on parameters like their current liquidity situation and the spot price. But the users have a window between accepting the edge node's bid and the expiration of the HTLC in which to settle the payment. Prices can move inside that window. If I initiate a USDT payment at one rate, then I can wait until the rate moves in my favor before I release the pre-image and settle it. If the rate moves against me, I simply don't release the pre-image. In that case, the edge node might initiate a channel closure to redeem the funds, but that's a slow and therefore costly process. If it moves in my favor, the edge node is on the hook for the difference. Heads, I lose nothing. Tails, I fleece the edge nodes. Payments involving any combination of assets on Lightning give the user a call option. Traditional financial institutions manage their downside risk by selling call options by adding the risk to the price. These options can get very expensive for unprepared edge nodes. Just ask Killian and Michael at Boltz, who originally brought this whole issue to my attention and had the class to describe it for all of us in the ecosystem. The alternative is for the edge nodes to price the call option into their quotes, just like traditional financial institutions. Intertemporal arbitrage is great work if you can get it. Users aren't the only source of concern for edge nodes either. If a routing node fails to forward the preimage, whether through intent or malfunction, the edge node could still be on the hook. At least with routing nodes, it might be possible to implement some form of reputation system to help choose the route. However, a reputation system for end users might not be feasible, as new users will be constantly joining the network. The free call options have never been a problem for Lightning until now, because the network has only dealt with a single asset, and that's Bitcoin. If the free option problem became serious enough, one could imagine multiple parallel single currency Lightning networks emerging. One for Bitcoin, one for USDT, another for, if Bitcoin gets cut out of the loop, we will lose the benefit of Bitcoin interoperability. We might even wind up regretting bringing USDT onto Lightning in the first place. Bitcoin was always meant to be revolutionary. Disrupting broken fiat is the whole point, and always has been. We're in it for the revolution. We know that change and disruption was never going to be a smooth process, but change is a good thing. Progress is just a kind of change that people welcome. We welcome USDT on Lightning because we see the opportunity. It can represent progress for USDT users, for Lightning, and for Bitcoin. Like any change, though, it's going to require careful thought, preparation, sharp instincts, and quick reactions. You don't go into uncharted territory without the right gear and a few skills. Anyone in the Lightning liquidity business is going to face some new challenges, but also stands to make some big gains. Tether stands to gain an economical, decentralized distribution network and better access to vital U.S. markets. Lightning stands to gain a massive infusion of liquidity in users. Bitcoin will be natively interoperable with USDT. That's why there's so much excitement. But regulators are watching, and edge nodes will only offer the indispensable conversion services if doing so is profitable, not ruinous. So let's approach this change as we do with all new developments in Lightning, by thinking hard, designing carefully, hardening our code, preparing the market, and never losing sight of our ultimate goal, which is to realize the universal Bitcoin economy. All right, that's the end of the article. The URL to this article is going to be in the show notes, as are all the URLs for all the articles. They're always in the show notes. I kind of recommend that you go read this one for yourself, because the whole notion that we have this new thing, what is it called? Let me see if I can find it again. It's this whole issue, this call option issue between Lightning or between USDT and Bitcoin on Lightning, because now the rails hold the capacity to pass two completely separate assets on the same rails, which means that you're going to have what he called this temporal arbitrage. And it's going to introduce yet more game theory. See, this is one of the reasons why I don't like it when new things get added, because every time they do, the very first thing that happens is that some brilliant autistic ass degenerate that wants to do nothing but gamble is going to figure out a way to game that system. It doesn't mean that it's necessarily bad. but generally speaking, it ends up being slightly more than annoying. We've seen it before with the whole other Taproot asset thing, the ordinals and inscriptions. It's just, nobody really saw that coming. And honestly, it really hasn't dented all that much. It hasn't really scrapped Bitcoin. It's not really done all that much damage, but it was very annoying. It's still rather annoying. And now we're bringing sort of that same potential annoyance to the Lightning Network. So we're going to have to be really careful. But here's the thing. Stablecoins are not going away. Now, I hope all alts die. That is for damn sure. I am completely uncertain about stablecoins. I think they hold just as much bad news as they do good news, generally speaking, for Bitcoin. And it's going to boil down to the human spirit. But we've got a couple of other fish to fry. Just so you know, in case you did not hear, El Salvador bought the dip. They added another 7 Bitcoin to their strategic reserve. That happened yesterday. So people are still buying Bitcoin, including Metaplanet. And this is Timmy Shin from The Block. Metaplanet buys an additional $12.9 million worth of Bitcoin, and it now holds 2,235 BTC in total. Japanese investment firm Metaplanet has once again purchased Bitcoin, this time investing $12.9 million to acquire the top cryptocurrency and continue its accumulation strategy. The Tokyo-listed firm announced on Tuesday that it purchased an additional 135 Bitcoin at an average price of 14.3 million yen, or about $95,951 per Bitcoin, totaling $12.9 million. The company's latest Bitcoin acquisition boosted its total holdings to 2,235 BTC. Metaplanet officially designated its Bitcoin treasury operations as a core business line in December, after announcing its Bitcoin accumulation strategy in December, and the firm aims to hold 10,000 BTC by the end of 2025 and 21,000 BTC by the end of 2026. So people are still buying Bitcoin even though we are going through this correction. And ladies and gentlemen, this is now officially a correction. It is 20% down from its all-time high. So that is technically, it is what they call a technical bear market. We're here. It doesn't mean that we're going to stay here. It's just when they say technically it's a bear market, that's what it really means. Yeah, technically it's a bear market. When you lose 20% of your shit over the, like a couple of weeks, yeah, that's a pretty intense dip, dude. So buy the dip, DCA, make sure you hold your own coins, get all of your coins off of all exchanges, get them off today, and let's run the numbers. CNBC, futures and commodities, everything is in the red again today. Most of this seems to have something to do with yesterday. Trump announced that the tariffs against Canada and Mexico will go forward. There also seems to be some talk about the relaxation of certain, strictures against Russia. So it's roiling the markets again today. So if you think Bitcoin is the only one caught in the crosshairs, think again. Oil off 2.62% to 68.85 on West Texas Intermediate. Brent North Sea is down 2.5 points to 72.89. Natural gas is up over half a point to $4.02 per thousand cubic feet. Gasoline down almost 2 points, under $2 a gallon to $1.97. Gold losing almost 2 points, down to $29.06 30 cents. Silver is off by 2.65%. Platinum moving sideways. Copper is down almost a full point. Palladium is down almost 2 full points. Biggest winner in ag today is chocolate, 3.5% to the upside. Biggest loser is coffee, 2.6% to the downside. Meanwhile, live cattle is up 0.5 point. Lean hogs are down 1 point. Feeder cattle are up 1 full point. Indices for the equity markets, your legacy bullshit is having a bullshit day. Dow is down 0.11%. S&P is down 0.75%. NASDAQ taking it on the chin, 1.25 to the downside, and the S&P Mini is down 0.5. And, of course, Bitcoin is down to $87,070. That is now a $1.73 trillion market cap. We can only purchase 29.4 ounces of shiny metal rocks with our 1 Bitcoin, of which there are 19,828,785.5 of. And average fees per block are kind of manageable. 0.08 BTC taken in fees on a per block basis. There look to be about 81 blocks carrying 106,000 unconfirmed transactions waiting to clear at high priority rates of 8 Satoshis per VByte. Low priority is going to get you in at 7. And it looks like some more hash rate came off of the network. It's pretty much the same as yesterday. 750.6 exahashes per second is still a massive chunk of security for the network. Now, from pre-hack attack, yesterday's episode of Bitcoin, and I got Daniel Prince. Hey, Dan, good to see you. Hey, if you did not know this, I was on Daniel Prince's podcast with him and his daughter, Lauren. I wish I had been able to hang out for a lot longer than I was able to, but I had to take my daughter to a doctor's appointment, and I couldn't miss it. So my apologies to Lauren and Daniel. But Daniel Prince gives me 1,000 sat, says, I haven't listened yet, but I already know it's a banger. That's it for the weather report. Thanks, Daniel. He's basically that was a boost on over on nostr where he said that. Psyduck with 555 sats says, Psyduck, in a little smiley face. Paul Surnine with 500 says, thanks for another insightful episode. Always appreciated. Keep up the good work. For anyone interested in the technicalities known so far of the Bybit hack and what aspects are relevant for BTC, there's a special episode of Watchman Privacy, and he gives the URL for that. So let's see. I'll try to put this. Let me see if I can't shuttle this on over to my note structure, blah, blah, blah. And I'm going to put it right there. Okay. So the URL will be for the episode that he's talking about will be in the show notes. Pies with 420 says, thank you, sir, for always promoting value for value and putting out what I feel is the most solid Bitcoin podcast out there. Dude, Pies, coming from you, that is one hell of a compliment. Thank you. Pies with yet another 420 says, value for value. Hashtag 40HPW. Thank you, sir. No, thank you. Wartime with 333 gives me a emoji I cannot read because my operating system is, yes, that old. God's Death 237. Thank you, sir. No, thank you. Permanerd with 234 says, there's a reason went the first 5 letters of Ether. That's where your money ends up. There is a reason went the first 5 letters are Ether. Oh, into the Ether. Yeah. No shit. Okay, that's the weather report. Welcome to part 2 of the news you can use. GameStop has been urged to convert its $5 billion of cash into Bitcoin by Strive's CEO, Matt Cole. Matt Cole, a CEO of Strive Asset Management, has urged GameStop to adopt Bitcoin as a reserve asset. Hold on. Something is being really weird. Hold on. I gotta refresh this page because it just got weird. Let's try this again. Matt Cole, CEO of Strive Asset Management, which is an investment firm co-founded by Vivek Ramaswamy. They're the ones that urged GameStop to adopt Bitcoin as a reserve asset. Cole sent a letter to Ryan Cohen, chairman and CEO of GameStop, on February the 24th. According to Cole, GameStop has a unique opportunity to redefine itself as a market leader with its nearly $5 billion cash reserve. Quote, we believe GameStop has an incredible opportunity to transform its financial future by becoming the premier Bitcoin treasury company in the gaming sector, end quote. According to the letter, Strive's clients hold shares of GameStop through the asset management's exchange-traded funds, giving the firm a fiduciary responsibility and vested interest in GameStop's success. Cole said his firm holds GME stock in 3 different ETFs without disclosing the amount. The letter comes after reports surfaced earlier this month that GameStop might be considering investing in alternative investments, including Bitcoin and cryptocurrencies. And in the last 2 years, GameStop has reduced its operating losses and managed to offset these deficits through interest income from cash holdings generated from equity offerings, the letter said. These initiatives have stabilized GME's balance sheet and positioned the company for dynamic strategic moves, the letter adds. Cole argues that Bitcoin will be the new hurdle rate for capital deployment. The letter also argues that cash is a negative real return. Bitcoin is deemed an inflation hedge in terms of outpacing monetary debasement. Strive CEO suggests GameStop should focus on Bitcoin and avoid other cryptocurrencies while leveraging capital markets to issue at-the-market offerings in convertible debt securities. What they're talking about, they just need to straight up adopt what Michael Saylor's been doing. And here we go. The letter's suggestion mirrors what several other companies, including MicroStrategy, Similar Scientific, and Mara Holdings, are already deploying. Most of the larger cap stocks that have bought Bitcoin in the open market have seen not only their stock price rally, but also opened up new avenues for capital raises. The letter ends with Cole applauding GameStop for closing unprofitable stores and publicly rejecting diversity, equity, and inclusion programs. Cole said, quote, we applaud the leadership your firm has already taken to close many unprofitable stores and publicly reject DEI. So he just said it again. All right. So, but if I'm looking at MicroStrategy stock, it is at $251.84 after a 11% loss just today. So let's be careful about which way we go on our thoughts when we're thinking about people like Similar Scientific, who is also down by 6%. Mara Holdings, I don't have them in my list of stocks to watch here, but all the guys that are exposed to Bitcoin heavily, including IBIT, BlackRock, they're down 6.82% just today. Now, this is a technical bear market. It did not help that Bybit got hacked, and I understand that. At this point, is this the time to release this letter to GameStop? Well, the letter was probably written before the whole Bybit debacle happened. It was probably received before the whole Bybit debacle happened. And now I can almost guarantee you that Cole is probably looking at the letter and looking at Bitcoin price and saying, we might want to pause and take a breath. I guarantee you that's what they're doing. So if anybody out there is going, oh, dude, any day now GameStop is going to just, unfurl their $5 billion in cash into Bitcoin, yeah, you're probably going to have to wait on that. You're probably going to have to wait a lot, not a long time, but you're probably going to have to wait a good bit. The dust and the fog of war is still settling out of the whole Bybit thing, and then fresh on the heels was the announcement by the Trump administration, that tariffs on Mexico and Canada were still going forward. That's rattled everything. Oil markets, as I just described, are just tanking. Everything sucks, man. I mean, it's like nobody is winning right now. That's why everybody keeps going into cash, because they don't know where else to go. Do they want, the only people that are still buying houses, as far as I know, is BlackRock. So real estate's kind of out. You don't want to get anywhere close to commercial real estate. That's for damn sure. And that's been a fact for a while. All these shiny metal rocks are losing value. Energy looks like it's kind of just tanking, if not just moving sideways. So where would you put your money? I wouldn't put it in art right now because that's probably the next industry to freaking tank. Nobody knows where to put their money. So it all goes into cash. And then they're going to do what? Money printer at one point or another is going to go burr. Nobody knows what to do. I mean, I know what to do. You just buy Bitcoin and hold Bitcoin. But even then, you've got these signals that have been happening over the last 2 or 3 days or 4 days. Well, actually, since last, Friday is when Bybit happened, or Thursday afternoon. I can't remember exactly when. But at least for like 3 or 4 days, it's been kind of a shit show. And so normie people are looking at Bitcoin going, too volatile, man. I don't want to lose my money. And all of them were going, well, I'll wait for the dip. And now that the dip is here, they don't want to buy. It's human nature. It's nothing that I'm scared of at all. I'm just saying, be aware, it's human nature. So when we talk about, hey, look, all these, companies, when they bought Bitcoin, their stock price went up. Yeah, but their stock price is also affected by Bitcoin directly. That's a problem with having that much exposure. And it doesn't mean that I think that they should reduce their exposure, and nor am I saying they should, increase their exposure. I'm just saying that the facts of the matter are, when you're attached at the hip to an asset that is volatile, you've basically converted your stock price into being more volatile. You're matching the volatility of the underlying asset that your company's stock price is relying on. So at this point, I'm just saying that the GameStop guy might be taking a very serious set of deep breaths before he even contemplates what he's going to do with that $5 billion. He may just want to keep it in cash because God only knows, nobody else knows where the hell to put their money. Anyway, South Dakota is going to have fun staying poor along with Montana. Let's get into it. Vismaya V. Decrypt says South Dakota follows Montana's lead, throws water on Bitcoin reserve plans. South Dakota lawmakers dealt yet another blow to Bitcoin advocates on Monday when they voted to axe a bill that would have allowed the state to invest in Bitcoin. In a key move, the House Commerce and Energy Committee voted 9-3 to defer House Bill 1202 until the 41st day of the session, a procedural decision that effectively killed the bill as the session concludes in no more than 40 days. South Dakota's decision follows a similar outcome in Montana, where lawmakers shot down their only chance of survival. Shot down a Bitcoin reserve bill in a 41-59 vote last week. The proposal, introduced by State Representative Logan Manhart, sought to permit the state to allocate up to 10% of its public funds into Bitcoin investments as a way to diversify its financial portfolio. Quote, It's a common sense update to South Dakota's investment strategy by allowing a limited allocation of state funds into alternative assets that have consistently proven to preserve value, particularly in inflationary environments, Manhart said, as cited in the South Dakota Public Broadcasting Report. Matt Clark, South Dakota State Investment Officer, raised concerns about Bitcoin's volatility and lack of intrinsic value. Quote, Bitcoin doesn't have any underlying physical use. It does not generate income, much like commodities or other kinds of assets, end quote. Let me pause right there. Clark doesn't seem to understand that unless he is Johnny on the spot and the same guy that would be getting paid millions of dollars a year working for a hedge fund in being able to identify income generating assets like commodities or equities that outpace inflation. See, that's the thing. Does the generated income that Mr. Clark is talking about, does it outpace inflation? Most of them do not. And the guys that get paid the massive bucks are not working as the state investment officer for fucking South Dakota. They're in New York City, or they're in London, or they're in Dubai, and they're making millions of dollars being able to determine and correctly determine which assets and commodities outpace inflation with their income generation. And Clark is not that guy. I'm just saying. Let's continue. He also continued and said, while Bitcoin could potentially be integrated into state investments in the future, the current market uncertainty made it too early to amend the law, and passing the bill would only lead to more confusion. Manhart disagreed, saying that Bitcoin, with its fixed supply and decentralized nature, is a valuable asset that the state should consider taking advantage of. Despite the setback, Manhart remains determined to push for the bill's revival, pledging on Twitter, "We'll be back next year." While states like North Dakota, Wyoming, and Pennsylvania have also stalled Bitcoin reserve proposals, the momentum is not dead. Several other states, including Florida, Arizona, Utah, and Texas, are pushing forward with their own bills, with around 18 state-level Bitcoin reserve proposals still pending, as shown in the Bitcoin Reserve Tracker. And I'm going to look at that right now. Let's see what's going on here. Let's see. Okay, so here's the states that have rejected: Pennsylvania, South Dakota, North Dakota, Wyoming, and Montana. And y'all can have fun staying poor. Pending, there are a lot that is still pending. And Utah and Arizona are still in the quote-unquote consideration phase. So there you go. There's that one. Continuing, meanwhile, Bitcoin and other cryptos took a hit on Monday amid fresh concerns and a steep drop in technology stocks, contributing to a general risk-off atmosphere across global markets. Yeah, it ain't just Bitcoin. So there it is. South Dakota decided to have fun staying poor. However, another state in the United States is still fighting the good fight. Atlas 21 has this one: no taxes on crypto payments. Ohio presents the bill. Yay! On February 24th, Ohio, high in the middle and round on both ends, introduced a new bill that would prevent additional taxes on cryptocurrency payments. The legislative proposal, House Bill 116, known as the Ohio Blockchain Basics Act, introduced by Representative Steve Demetriou and supported by 5 co-sponsors: Tex Fisher, Brian Lorenz, Ty D. Matthews, Riordan McLean, and Josh Williams. And that aims to amend existing legislation to prevent municipalities from imposing taxes or additional fees on digital assets beyond those already applied to fiat currency transactions. The proposal states, quote, "The General Assembly will not pass a bill proposing to impose taxes, fees, or other charges on digital assets used as a method of payment for goods and services," end quote. The bill clearly defines digital assets to include cryptocurrencies, stablecoins, and, God forbid, non-fungible tokens, otherwise known as NFTs. It also clarifies that taxes typically applied to legal tender, such as state taxes and sales taxes, would continue to apply to crypto transactions, but without the addition of new tax levies. The proposal further establishes that no state agency or political subdivision may prohibit citizens from accepting digital assets as payment for goods and services. The bill guarantees residents the right to maintain self-custody of their digital assets using hardware wallets and non-custodial wallets, as well as participate in cryptocurrency staking. Activities such as mining, staking, and trading crypto assets would not require money service business licenses under existing Ohio laws. Citizens would also be allowed to mine in residential areas as long as they comply with local zoning regulations, while mining companies would be explicitly authorized in industrial zones and could not be unfairly penalized by charges or changes to local zoning laws. The bill also touches on Ohio state pension funds, which would be required to assess the potential risks and benefits of investing in crypto ETFs, with an obligation to report to the General Assembly within 1 year. Last September, Senator Niraj Antani introduced a bill that requires the state to accept cryptocurrencies for the payment of state taxes and fees. All right, so here's the thing. this bill has all that in one shot. And a lot of these bills at the state level has all kinds of stuff in the same bill. So in this, like, for example, I'm using Ohio. Bills like the Ohio bill that talk about not taxing a cryptocurrency payment for goods and services as a de minimis, like, anything over like $3,000, maybe you get taxed on. Anything under $3,000, it's just a payment. There's no reason in the world to tax it as a payment. You're already paying the sales tax on buying, I don't know, your refrigerator or whatever it is that you're getting. Okay. Then you have the other side of a bill that says, the other side of the same bill that says, we want to invest state funds into Bitcoin. When the part of the bill that people freak out about because of the volatility of Bitcoin at present, when people look at that side of the bill, and that side of the bill is investing state funds directly into Bitcoin so that you can have a Bitcoin strategic reserve, when that part collapses, it collapses everything else. So then you don't have the part where you don't have to pay taxes or extra taxes on a payment made in cryptocurrency such as Bitcoin. This is why these bills should be separated. There should be a completely separate bill for you don't have to pay taxes, you can use it as a currency, you can have your own wallet, you can do your own mining, all of that stuff. It really needs to be separated out and put into its own specific bill. The investment of state funds directly into Bitcoin or Bitcoin ETFs or whatever, that needs to be in yet another completely separate bill. You need to firewall these things so that you don't end up throwing the baby out with the bathwater. Will we see that occur? I don't know, but I think that should actually happen. Okay, here's some software updates. LiftPay temporarily suspends operations and winds down its wallet services. I have never heard of LiftPay before, but the custodial mobile Lightning wallet service provider is asking users to withdraw their funds within the next 60 days. If you are a LIFPAY LiftPay service user, then you need to start thinking about getting your shit off there. Quote, after thorough evaluation and in alignment with regulatory requirements, we have made the difficult decision to temporarily suspend LiftPay's operations, announced the project. As part of the winding down process for the wallets, LiftPay users are urged to withdraw all Bitcoin within the next 60 days by submitting a withdrawal request. That doesn't sound good. You should just be able to get it off. Why do you need a... This is bad. I hope nobody listening to my voice actually uses LiftPay, because that right there was a huge red flag. Dude, seriously? LiftPay users are urged to withdraw Bitcoin within the next 60 days by submitting a withdrawal request? Then why was I using the wallet in the first place? How about I just withdraw the Bitcoin? You know what? Screw you guys. I'm taking my ball. I'm going home. Let's get on to the next one. I don't need to worry about the rest of that stupid bullshit. Frostr. This is the one. This is the one that I've kind of been waiting for. It's about Nostr. If you're not on Nostr, I can't help you. I've told you to get on Nostr before, but if you're not listening to me, you're just not going to listen to me now. But Frostr, Frostr, Frostr. Turn your nSec into rotatable multisig. Your nSec is your private key for Nostr. Your npub is your public key for Nostr. Right? So it's sort of like username and password kind of thing, all right? But turning your nSec, your secret key, your private key, into a rotatable multisig apparently is now on the horizon with Frostr. Frostr is a simple T of N remote signing and key rotation protocol for Nostr powered by Frost. The protocol uses Frost in order to coordinate the signing of a message between multiple signing devices owned by a single user. website or application makes a request to the user signing device to sign a note. The user's device makes a signed request to the remote signing devices. Each remote device verifies the request and responds with a partial signature. User's device verifies each partial signature and then adds their own. The signatures are combined, and the complete signature is returned to the website app. Key libraries of the project include Frost, nostr P2P, and Bitfrost. Frostr is still under active development. All of the project's code is open source. Contributors, testers, and reviewers are welcome to test it, poke holes, and provide feedback. Key features are that it breaks up your secret key into decentralized distributable shares. Sign messages using T of N signing devices. If one share is compromised, your secret key is still safe. Discard and replace shares without changing your secret key and identity. And of course, there is a GitHub repo for it, and there is a website, which I'm going to right now. It is www.frostr.org, and it gives other information, and I shall put that down into the show notes so that you can go directly to it. Let me just dump that right there. There we go. Okay, so that is all I've got for you today. Yes, we are still having issues with the Bitcoin price. We are at $87,131.60. I get it. Everybody's pissed. We're going to be bitching and moaning, and it's all Bybit's, problem. It's all the fault of the tariffs from Trump administration. They still haven't done their quote unquote day one Bitcoin strategic reserve. So lied. I got to call it like I see it, man. Lied, straight up lied. Basically just told a whole bunch of Bitcoiners, hey, we're going to do a Bitcoin strategic reserve. And we all went, yay, we want to vote for you. And then we voted for him, and we're still waiting on the Bitcoin strategic reserve. Well, I haven't heard anything about it since, whoever the crypto czar is made some cryptic comments about 2.5 weeks ago. And I haven't heard jack since. You know what else I haven't seen is the Epstein list. I haven't seen the JFK files. I haven't seen the RFK files. I haven't seen the MLK files. Everything they said they were going to release is not been released. I'm not all that happy about that. I was told there would be releases. I was told there was going to be a Bitcoin strategic reserve. I warned everybody, hey, take that shit with a grain of salt because it's just a politician saying political things for political gain. We'll have to see whether or not they make good on any of this stuff. But right now, honestly, guys, it's kind of not looking all that good for the Epstein list. Pam Bondi still has it sitting on her desk. Why? Why is it not out in the public? Is there something on there that we don't need to see? And if that's the case, then we're right back where we started from. But the Trump tariffs are causing problems. Bybit definitely caused problems. We've been here before. We'll be here again. We've seen 20% dumps. If you've been in Bitcoin for any length of time at all, you've probably been through at least 20% dumps. I've been through, 12 or probably even more. I don't know. It's been ugly. It's been ugly since 2015, but it's punctuated with these really great times. So I'm not all that upset as much as I am really annoyed. And I don't like being annoyed, so I'll see you on the other side.
This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.